Hello, Oracles. Tesla just does not want to get away from that $260 level. With the conflict we have that began over the weekend in Israel, we ended up seeing a massive sharp drop in the stock price this morning. But as the day went on, we recovered, went green for a little while, and then ended up pulling back and did close under 260. But this week we do have the CPI data that's coming out, and then next week we do have earnings. This is two reasons why there's some consolidation going on, just awaiting some bigger news to happen to decide which way Tesla is going to actually go. So we will get into the CPI numbers shortly to discuss what we can see from the macro environment standpoint as far as inflation and what the Fed might be doing when it comes to interest rates in November. So we will get into all of that in just a minute. All right, so looking at the charts today, again closing down 0.33% at 259.67. So looking at the 5-minute chart for the day, you can see we started off early, dropping down all the way down to that $252 level, and then pushed up as the day went on very nicely, topping out at 261.36 and then selling off slightly into close. But looking at the pattern we are in right now, we broke out of this upward channel. We came down, we've hit this bottom, and now we are beginning to recover. So now we're at this point where we're kind of consolidating right here again, right around that $260 level. So the question is going to be, are we going to break out or break down from here? And again, we say it all the time, the RSI is still right in the middle at 54, so it can go either direction. All right, so we'll start looking at all the CPI expectations that we are getting. These numbers are coming out on October 12th. That is this Thursday, and they will be coming out at 8:30 Eastern Time. So the forecast for this month is 3.6%. That is the same forecast we had last month. Last month, we did come in a little bit hotter at 3.7%. And now, this was nothing that the market really got scared about last month. It was just, all right, here's another data point, missed by a little, not a huge deal. And now, the very important month over month number, the forecast this month is 0.3%. Last month was 0.6%, and we came in at expectations. So, if we can come in at expectations of 0.3%, that's going to give the market an indication that that little bump in inflation was just temporary and we are now coming back down, back to where the Fed wants it, which again would be that indication that we are going to be getting a pause and no more rate hikes. And now the even more important number is the core inflation. This is what the Fed can actually control. This has been higher than the headline number. So this has been coming down steadily month over month. And again, the forecast for this month is going to be 4.1% versus the 4.3% we got last month. Last month, we did meet that expectation at the 4.3%. And now, to me, this number getting closer to the headline number is a place where the Fed wants it. There isn't as much of a disconnect. So, a few things like housing that are now coming back into line are working out better, and now everything can kind of move in accordance. So, right now, with a 4.1%, that would only be 0.5% above the 3.6% of the headline number. So, if we can come at the 4.1%, or even if we come under a 4%, that would be a huge number, and that could really give the market a bit of a boost. And lastly, we've got the core month over month, and this is also at a 0.3%, just like the headline month over month number. So last month we had a forecast of 0.2, came in at 0.3. So if we can hold at the 0.3% level, I think that will make the market very happy. So overall, inflation does seem to continue to come down in line. Yes, we had a couple of months where we did tip up a little bit in the headline number, but we did see the oil prices going up. This past month, we did see the prices of oil peaking quite a bit, but it was a very short stint of time. And I don't know about you, but me at the gas pumps, I didn't really notice that much of a difference when it came to the gas prices. And again, if it was very short lived. I actually got gas today, and the prices were lower than they had been last week. So, of course, that's going to reflect in next month's CPI, but last month I really didn't see the prices of gas all that much higher. And yes, there's a lot of other factors that go into it, but it didn't really factor into a lot of things. So I don't think it's going to affect the prices of things very much in the CPI data itself either. Sometimes when you see an oil price spike like that, many producers will just kind of eat that cost in the short time just because it's something that they have built in. When you start to see extended periods of time like that, that's really when you start to see the prices of things start to go up. This time around, it was very short lived. Seems like the prices are coming down. We do have the fear going on right now that because of the situation going on in the Middle East, that it may end up causing the production and supply of oil to be minimized. So that might end up pushing oil prices up. But Janet Yellen did come out and say that they are working very hard at getting the oil prices to come down to that $60 a barrel level. Now, I do find this very funny because of the fact that the administration currently has been telling us that they have no control over prices of oil, yet now they're telling us that they're going to work hard on getting the price of oil down. This is just how politicians work. It is what it is. But we just have to kind of pay attention to this going forward. And this is exactly what the Fed is going to be doing as well. The Fed cannot control the prices of oil. The Fed can only control the prices of what they can control the prices of. What the Fed can do in order to control some of those things is raising the interest rates. When they raise the interest rates, it's going to cause businesses to spend less money. Businesses spending less money means that there's going to be less demand for oil, because sometimes that means that there's going to be less shipping. So when you have actual demand going down for oil, that means that when they cut supply of oil, it stays within balance to keep the price of oil down, therefore keeping inflation down. Of course, it's not an exact science, doesn't always exactly work like that, but that is the premise behind it when it comes to the Fed raising interest rates. That's really the only way they can kind of affect the oil prices when it comes to inflation, because they cannot do it directly. And so one of the things that I do look at right now is, hey, where is Tesla stock price? Where do I think it's going in the future, both near term and long term? And how am I going to be able to accumulate as many shares as possible? So I do like diversification. I know many of you are all in on Tesla. That's awesome. I think that's fantastic. For me, that's just not my cup of tea. I do like to diversify. So, those of you who are members and patrons, you've been seeing my whole entire dividend portfolio that I have been breaking out, working on getting myself some passive income coming in to be able to purchase more Tesla stock. So, in the near term, very near term, I think we have a potential, if we end up getting good CPI data and we get good numbers coming in from earnings, showing us margins, because that right now is the concern. Tesla has been cutting prices on their vehicles in many areas. They are going up on prices in some areas like Europe, but overall, they've been cutting prices more than increasing prices. And that's putting pressure on the fact of margins, because the prices that they have been cutting, they have not been recouping the sales to be able to make up for that and justifying it. Now, an argument can be made that Tesla cutting the prices meant that their sales could have been lower than they were right now. We will never know those numbers. We will never know if that is actually the case. All I know is that they have been going up on deliveries. Obviously, Q3 was an exception, but they have been going up on deliveries. So now we need to take a look at how our margins, because if their deliveries have been going up and they've been cutting all of these prices, that means that average selling price is coming down. This is a very good thing long term. But when it comes to near term stock price movements and near term analysis, what are the margins going to be looking like? So when we get to Q3 earnings, if we get some good margin numbers and we get some other good information out of this, we can see a pop from this. Then I do think at the Q3 earnings call, we're going to be getting information about the Cybertruck delivery event. Rumor has it it's going to be sometime end of October. So if we get earnings next week on the 18th, and then they announce that 10 days later they're going to be doing the Cybertruck delivery event, that could get a lot more excitement going behind things as well. Another thought is perhaps they're planning on doing it this way to kind of soften the blow of maybe a not so good number. Maybe they know that numbers aren't going to be as good as expected, because, even Elon at the beginning of the year said, what if we ran margins to zero? So perhaps to kind of soften a blow of maybe lower than expected margins, they're going to end up saying, hey, we have the Cybertruck event coming out. The Cybertruck pricing is going to be whatever it is. And that could end up being potential margin booster as well. Now, we know that we're not going to be delivering a ton of Cybertrucks in Q4, probably not enough that's actually going to move the margin needle, but that could still give us a little bit of excitement coming around about this that could offset some of those numbers. Again, we won't know that for sure, but in the near term, if we get good numbers, Cybertruck event, good CPI, we could eclipse that $300 level or at least test it. Now, conversely, if we get a bad CPI number, earnings don't come out so well, maybe the market doesn't even give a crap about the Cybertruck event that they're going to be announcing, we could end up coming down, breaking down, and coming down to fill that 217 gap. Again, a lot to work with. So it's anybody's guess when it comes to the earnings. You guys can let us know your thoughts in the comments below. This weekend, I'm going to try my best to be able to get my numbers all updated for you guys. Just got a lot going on with moving in my life, but that'll be my try for you guys is to get my numbers updated before we get into the earnings live stream next week. So now when we look out a little bit further, so not so near term, maybe 6 to 12 months out, I do think that we are going to be getting a macro environment pullback. And due to that, I have been adding to a lot of different dividend stocks and ETFs in my portfolio. My cash flow right now is pushing close to $600 a month. That is a lot of snowballing that is going on right now. I'm doing it intentionally because I'm trying to get myself to about $1,000 a month by the time I think we're going to see that market pullback. At that time, I can then utilize that cash flow coming in to buy a lot of these other stocks that I want and buy a lot more Tesla. So again, I'm not rooting for all of this to happen, but I'm kind of just preparing for the possibility of it. Because if it does happen, that's going to give us an even better buying opportunity. Now, at that point, I can then add a lot more shares because I do think 2025, we do start to pull out of that. 2026, we really start to push much higher. At that point, Tesla's going to have FSD most likely solved and regulated. We've got semi-truck pushing out on the road even more. Cybertruck is ramped. We're going to have the compact car that's going to be getting up to ramp at that point. We're going to have Mexico and India online for factories. Megapack and Energy are really going to be pushing. Optimus might actually be working in the factories sometime in 2026. So much awesome stuff going on that if we get that buying opportunity in 2024, I want to be ready for it. There's a lot of people who are talking about potential recession coming up. We've had an inverted yield curve. Every single time we have had that since 1967, we have seen a recession. Every single time. We currently have that inverted yield curve. And then when it does end up reverting, that's when we end up getting the recession. And it's just because there's a lot of lagging data that gets put into that when it comes to the Fed raising or lowering interest rates. So sometimes what happens is we get the Fed raising interest rates, that yield curve inverts, and then we end up getting a whole entire macro environment situation going on, which causes that whole thing to revert. And then the Fed has to pivot in order to compensate for what's happening in the macro environment to try and stop the slide that's going on. And then it takes about 6 months after that for the entire market to be able to catch up. And then we finally hit a bottom. And then we can kind of slowly find our footing again and then be able to go back into a bull market from there. That's what I am anticipating based on all of the historical data that we've gotten, based on the data we have right now that matches a lot of that historical data. That is what I am preparing for. Plan for the worst and hope for the best. If we don't end up getting that and we continue to run from here, hey, I'm still ready as well. I have 73 shares of Tesla and I still add every single day. I will continue adding to all of my other plays as well, just so I can have more free cash flow coming in. That's how I'm playing it. That's what I'm doing and how I'm preparing. And of course, I change on a regular basis because that's what a good investor does. So you guys can let us know the thoughts in the comments below what you think is going to be happening in the near term for Tesla. Do you think we're going to be getting the good CPI data that we're all hoping for and see the market continue to rally through Q4? Let us know your thoughts in the comments. Otherwise, thank you guys so much for watching. I appreciate all of your support. Have a great one.